You are watching India Global with me, Gaurie Dwivedi. Let's take a look at the big headlines that we're tracking this hour. First up, Prime Minister Modi concludes his two-nation tour by wrapping up his Singapore leg of the trip. India-Singapore exchanged 4 key MoUs. Singapore companies commit $60 billion to be invested in India. Russian President Vladimir Putin says that India, China and Brazil could act as mediators in the peace talks between Ukraine and Russia. Vladimir Putin made these comments at the Far East Asia Forum at Vladivostok. India will soon top China among emerging markets globally. Morgan Stanley India overtakes China in the MSCI Emerging Markets Fund, and it has the highest weightage, leaving China behind. China commits to $51 billion in fresh funding for the African continent. This comes as Chinese President Xi Jinping makes fresh efforts to deepen the leverage between China and Africa. And Justin Trudeau's minority Liberal government seems to be in trouble as the new Democrat Party formed by Jagmeet Singh pulls out. All right, big story that we're tracking right now. Prime Minister Modi has concluded his Singapore leg of the two-nation tour. Remember, he first was in Brunei, then in Singapore. On your screens are some of those images that had come in earlier, where Prime Minister Modi was at the roundtable meeting with business leaders along with Singapore companies who've committed an investment of close to $60 billion over the course of next few years. There are also key MoUs that have been signed between India and Singapore, essentially an extension of the Act East policy of the Prime Minister and his government. But first up, listen in to what Prime Minister Modi had to say. We come back and talk more with my colleague Mohammad Ghazali on this.
Excellency, सिंगापुर केवल एक पार्टनर देश नहीं है. सिंगापुर हर विकासशील देश के लिए एक प्रेरणा है. हम भी भारत में अनेकों सिंगापुर बनाना चाहते हैं और मुझे खुशी है कि हम इस दिशा में मिलकर प्रयास कर रहे हैं. हमारे बीच जो मिनिस्टरियल राउंड टेबल बनी है वो एक पाथ ब्रेकिंग मैकेनिज्म है.
10 साल के भीतर हम करीब 10 साल पहले 100 स्टार्टअप थे. आज करीब 100,000 से भी ज्यादा स्टार्टअप है. बहुत बड़ी मात्रा में ग्लोबली लोग इन्वेस्ट कर रहे हैं और सक्सेसफुल स्टोरी है कि बहुत बड़ी मात्रा में उसमें से यूनिकॉर्न्स बन रहे हैं. मैं चाहूंगा कि आपके यहाँ जो फाइनेंस के वर्ल्ड से जुड़े हुए लोग हैं, भारत के स्टार्टअप की दुनिया को अगर तराशेंगे तो उनके सामने बहुत बड़ी संभावना है.
All right, let's get in Mohammad Ghazali to fill us in with the latest as far as this trip is concerned. Mohammad, take us through the MoUs that have been signed between India and Singapore and the key highlights of the statement issued.
See, a very significant trip for Prime Minister, and as far as the MoUs are concerned, there were 4 MoUs which were signed between India and Singapore. The first one is related to the digital payment, which is largely about the technologies in which India and Singapore government, the Ministry of IT here and the Singapore government's counterpart will collaborate with, and both of them will work in upskilling the workers, whether it's digital payment, whether it's about AI, quantum computing, and many other facets of modern computing. In these sectors, India and Singapore have signed an MoU. Besides that, the Ministry of Electronics and Information Technology in India and its counterpart in Singapore have also signed a big MoU when it comes to the semiconductor cluster. And the Prime Minister, while addressing and meeting the CEOs of multinational companies in Singapore, have also spoken about that how they are developing smart cities in India, and many of them have been even offering a space to develop semiconductor clusters in India. So these are the 2 most important MoUs. Besides, the MoU talks about healthcare workers, upskilling workers or skill development centers, and also India will provide land and space to Singaporean companies to come and invest here. And that is why during the meeting with the CEOs, some of the CEOs of the Singapore companies have agreed to invest in India. And Prime Minister also spoke about economic reforms. He told that how in the last 100 days, though the government has not finished its 100 days in office, but still the government has taken as many steps which no other government in the world has ever taken. And wooing the investors in Singapore, the Prime Minister spoke about economic reforms and how these predictable reforms give an environment for perfect investment in India.
All right, Mohammad Ghazali, appreciate you breaking that down for us. Shifting focus now to what could clearly open floodgates as far as bringing in top dollar into India, Indian equities and Indian companies as well, is this latest update coming in from Morgan Stanley. In fact, reports suggest, and Morgan Stanley has said, that the MSCI Emerging Markets Index could potentially see India surpassing China. Now, this is an index where there are emerging markets which are given weightage depending upon a whole host of factors, and Morgan Stanley has said that the weightage that has been given to India till now is now going to increase. Now, what does that mean? It means that there is a complete reaffirmation as far as the India growth story is concerned. It suggests that the trajectory that India is set to take in terms of its growth and investment outlook looks much better, and in fact best as far as emerging markets is concerned. And most importantly, the equities rallied today, and it also is a thumbs up that there is a lot more lined up as far as the Indian economy is concerned. And to talk on that and a lot more as far as what does it mean in terms of the big picture outlook, let's get in Swaroop Gupta as well as Abhinav Mishra joining me on the broadcast. Thank you so much, gentlemen, for taking out the time and speaking to me on NDTV World. Let me start with you, Mr. Mishra, which is that this update that has come in from Morgan Stanley, the fact that India could have a higher weightage than China, is essentially a reaffirmation of the Indian economy. It's also coming at a time when there have been multiple upgrades, whether it's the World Bank or the IMF, both suggesting an upgrade as far as the Indian economy outlook is concerned. And then, of course, also the fact that the Indian equity markets are also doing much better than others.
Thank you, Gaurie, for inviting me. I think definitely it has been nothing new that India has been on a growing trajectory for the past decade. In the recent years, though, with the significant investments that we have seen across technology, infrastructure, and now also in manufacturing, the growth in both capital markets and the broader economy has been significant. And what we are anticipating is that the overall FDI into India will grow anywhere from what we see at about $80 billion today to about $100 billion within the next 5 years. And definitely, while India, to be honest, has not yet crossed China, and that will take some time on the MSCI index and such indices, but then historically, the weightage of India used to be under 10%, which is now inching towards equal weight with China. So right now, I think we are already about 19% in MSCI with the change that happened recently in August. Whereas China now has been pulled down from about 39% to close to 24%. So that definitely shows that the world is looking at India, and a lot of investments and foreign capital is there to stay with India and contribute to its growth as well.
Indeed. And most importantly, you're right about the fact that we've jumped from 9% to 19.8, a little under 20%. This growth has actually come in about 3.5 years. So we were 9.2% at the end of 2020, and at the end of August 2024, we are just a little bit under 20%. So this is the growth that India has seen in about 3.5 years, which is why it's significant and remarkable, and also coming at a time when the Chinese economy continues to face headwinds. Mr. Gupta, weigh in here in terms of the larger impact and how this is set to put India in terms of a higher trajectory when it comes to fund inflows that it could attract.
Thanks, Gaurie. To start off with, it's very important to underline the fact that this is as much China's misfortunes that we are seeing in play as much as India's growing presence and importance as far as global capital markets are concerned. As you can see, China's economic indicators remain extremely weak. All stops have been pulled out by authorities and the governments in power there in order to boost local self-government debt, the flailing property sector, and so on and so forth. But frankly, Chinese investors themselves, including retail investors, have been rotating out of those markets into other markets. And there's no brighter spot than India in this particular region. We've kept growth buoyant. Maybe the IU expects it to be a shade under 7%, in the current year. And of course, fiscal deficit remains on target to go below 5%, even though the fiscal deficit target for this particular year has been reduced. So it's a combination of various factors, very strong economic fundamentals, a very high free float, strong buoyancy among retail investors, and earnings results which have remained buoyant. So it's a combination of factors at play that have led to this particular situation coming into place. And of course, despite the near-term corrections that's happening, it's highly likely that the bull run that Indian markets are experiencing, and several other firms and agencies have weighed in on this. It's just getting, it's still going on. It's just getting started. It's perhaps not peaked yet. So there's every reason for FIIs to crowd in. The importance of FIIs was reducing,
Yes.
Over the years, past 12 years. That importance has gone down, but, they still account for a substantial amount, and they provide a firm basis, especially to the downside of the market. So it's nice to see, it's great to see, more
Absolutely.
inflows.
Absolutely. And just 30 seconds to tell our viewers right now that, when you simplify this, what does it mean and why does it impact viewers watching this, which is that the GDP growth rate is one aspect of the economy doing well. The other aspect, what Morgan Stanley has been talking and said today, is how more and more investors want to pump in money into India, because as an emerging market destination, it now looks more primed to get larger fund flows than what it did earlier, which is why the weightage in the index has gone up. Now, a lot of investors don't go about investing directly into a country. They do so through the MSCI index as well, which is why this is so important. And if fund flows increase, it means access to capital, access to more funding for companies, and that starts another cycle of expansion. Now, Abhinav Mishra, a lot of investors do seem to think that maybe the markets in India, they've had a great bull run this year, but are they headed for a correction? That was a question being asked before Morgan Stanley came out with this report. So clearly, those naysayers or those skeptics seem to have got their answer already. There's a lot more in the Indian equity markets right now.
Absolutely, and I'm not denying that the valuations have been increasing recently, but the truth also is that India has shown resilience in the way its economy is operating, but also of late in the capital markets, and not only the foreign flows, the domestic flows have been increasing steadily. And what that means is
any sectors that you
markets
think would probably attract disproportionately higher fund flows given this change in commentary and change in weightage?
Indeed. So I think these services has always been a player, and I think with the advent of the focus on data, AI, and semiconductors, both IT services and technology-related R&D would still be sectors of focus. However, going forward, we are seeing a lot of capital flows would come to green energy and infrastructure space as well. India, as a booming economy, will continue to need significant investment in both infrastructure and to really reap the benefits of its demographic dividend.
Yes.
We will need to create a lot of jobs, and those jobs would largely come from the manufacturing and the boom in manufacturing sector.
Absolutely.
And the government has been focusing a lot in that space.
Absolutely. Quick closing comments, Swaroop Gupta, sectors that you think would benefit the most?
I tend to agree when, infrastructure is called out, but there are other sectors which look defensive but might be good place going forward. Pharmaceuticals, for one can never undermine the importance of that sector. And I'd also like to pick out defense stocks. I know they're very small at this point, but, FI is probably going to be entrenched for the longer term, and therefore those prospects will increase going forward.
All right, I would probably pick the consumer growth story as well, because India is a very large consumption story. So my vote would probably go for that. But thank you so much, gentlemen, for speaking to me on a story that we're going to keep revisiting as we talk more and more about the India growth story. On that note, we slip into a very short break. We come back on the other side and talk more about China's Africa ambitions. How much of it is funding? How much of it is a debt trap? We come back and talk more of that. Welcome back. You're watching India Global with me, Gaurie Dwivedi, shifting our focus to the African continent, which China has been eyeing for the last 1.5 decades in great detail. It's been pumping money. It's now doing so yet again this year as well. $51 billion is the funding that China has committed to the African continent. But how much of it is actual money? How much of it is that famous debt trap that China has been building, some would say has built already in pockets of the world, Djibouti being one, in Africa as well. And what lies ahead in terms of China-Africa ties, impact on the rest of the world, and of course on India as well, which has been trying to deepen its engagement with Africa. Okay, Andrew Lung, who's a China strategist, joins me on the broadcast, along with Godfrey Mutizwa, who is the editor of CNBC Africa. Thank you so much, gentlemen, for taking out the time. Godfrey, let me start with you. I was going through some of the numbers. You know, if you just take a look at the $51 billion divided between the different heads, credit line is $30 billion, $11 billion is a very vague various assistance category, and $10 billion is the investment. So when you say $30 billion of credit line, we know that Chinese loans don't come cheap, do they? So how is the African continent reading this? And how do you see this in terms of the money that continues from China? But the color of those checks make all the difference, don't they?
Indeed. And as you mentioned, the bulk of that money is certainly in credit lines. So I did a quick calculation. So 20% of that money is what will come in as investment. But you've got to look at it, I think, from an African perspective. You're talking about a continent that is hungry for capital, that's got a lot of needs. And so you will find perhaps not too many questions are being asked about how the money has been divided. But of course, even as we talk about that $51 billion, reminding you again that this is a far cry from the huge amounts of money that had been poured in before. $120 billion over a decade in the previous assistance period. So there's certainly a scaling down, but the money certainly continues to come in for a continent that might not be asking the right questions in many cases.
Absolutely. China has pumped in more. 2016 was its best year in terms of overseas investments. It scaled down because of how its economy has been doing back home as well. But, you know, when I saw the statement and the details of the summit, what stood out was 3 countries, Zambia, Ethiopia, Ghana, all saying that they want a debt relief. South Africa, where you are, also the president said that we want better terms and we want to change the dynamics of the trade. We don't want to keep sending raw materials and keep importing finished goods. So essentially, China, the trade relationship that China has right now with Africa is one-sided, and 10 years after this partnership, it isn't changing.
It remains one-sided. There's no question about that. And as you mentioned, the president of South Africa, Cyril Ramaphosa, making the point that he wants a more balanced trade relationship between China and South Africa in particular. In fact, the numbers are scary. When you go back to 2021, Xi Jinping promised that he was going to spend $300 billion buying African goods. We all know that that is not panned out for various reasons. Yeah, so the relationship is certainly skewed, but there's little in terms of strategy that we see that African countries will implement to try to balance that relationship. You speak about the other countries that have got issues, Zambia, Ghana, certainly on the debt side, and Zambia, as you know, defaulted on its debt to China. It's a continuing problem for the African continent without question, but there appears not to be any kind of overall strategy that will help the continent negotiate better with China. Each country appears to be going in on its own behalf, and this, of course, as we all know, is an unequal relationship.
Indeed. Andrew Lung, respond to that. Pandemic came, pandemic went. Countries pleaded China for some sort of a debt relief. They didn't get any. Even at this summit, there were countries, 4 of them, which said that some debt relief needs to be given. But all one talks about is loans and loans when it comes to China.
Well, before China became a big lender to Africa, let's not forget that Africa was the net recipient of a lot of free gifts from the West. In other words, not only debt relief, but straight line grants, and they did not help Africa's development. Because
how much
as
debt
the
relief
saying
has
goes,
China given?
It's no use.
How much debt relief has China given to Africa?
Well, as far as the debt situation is concerned, a recent study by a UK-based think tank called Debt Justice found that a lot of African countries, they are more indebted to Western commercial lenders in aggregate in comparison with the loans from China. But of course, that as the previous speaker was pointed out, Africa was in great need of not only capital, but infrastructure. In other words, Africa is the world's last dynamic food basket. But most of the agricultural products, they're out of nowhere. I mean, how
Absolutely.
do you take
I couldn't agree more that the African continent needs infrastructure, world-class infrastructure. But the question, Godfrey, is should it be at the cost of sovereignty of these assets? So I want to ask you this, that the next phase of the Chinese-African relationship, do you see that now keeping these African interests in mind when they negotiate with China for additional loans, additional projects?
Well, indeed.
Well, there appears certainly to be a little bit more vocal, if I may say. They appear to be a little bit more vocal in terms of what they want from China, that is the African countries. But I think what is missing is a broad overall strategy that helps them negotiate from a position of strength. Individual negotiations of the countries between themselves and China, I don't know. I don't know how, to what extent they would be able to yield the kind of results that would skew the debate and perhaps balance that relationship.
Indeed, absolutely. And Djibouti is an example of where that balance needs to be struck by governments as far as infrastructure needs and sovereignty concerns. Appreciate both of you for taking out the time to speak to me on NDTV World. And shifting focus now to Canada, where NDP leader Jagmeet Singh is ending the party's supply and confidence agreement with the Prime Minister Justin Trudeau's Liberal government. The deal, set to last until June 2025, was terminated and announced on social media. Singh criticized Justin Trudeau, saying that Justin Trudeau has shown time and again that he caters to corporate greed. The Liberals have failed Canadians and do not deserve another chance. Looking ahead, Mr. Singh warned of a looming battle when it comes to the peer politic and the Conservatives, accusing them of planning cuts that would impact workers, retirees, youth and families, all to benefit big corporations. Listen in to what he had to say when the stage is set for probably an early election in Canada.
Today, I notified the Prime Minister that I've ripped up the supply and confidence agreement. Canadians are fighting a battle for the future of the middle class. Justin Trudeau has proven again and again he will always cave to corporate greed. The Liberals have let people down. They don't deserve another chance. There is an even bigger battle ahead. The threat of Pierre Poilievre and Conservative cuts from workers, from retirees, from young people, from patients, from families. He will cut in order to give more to big corporations and wealthy CEOs. The fact is, the Liberals are too weak, too selfish, and too beholden to corporate interests to fight for people.
All right, completely timed out of this edition of India Global. Thanks so much for watching.